Hey everyone, it is Evan here from the Trade Risk on Wednesday, May 29th. We are intraday right now, and this is our weekly trade ideas video where we bring you some of the names on our watch list, stocks that are holding up well, showing some good relative strength, and ideally are not yet too extended in their moves. As always, these videos are powered by our partners over at Investors Business Daily. We're curating ideas from their stock lists. You can get access to their lists with a link in the description of this video. Now, I'm going to do a little bit of a hybrid video here. I'm going to start off doing a quick look at the market environment. We usually do our Tuesday midweek market recap video, but we skipped it yesterday just because of the holiday on Monday. Not a whole lot had changed, but with the pressure we're seeing today, there's enough kind of movement here that I just want to touch on the major averages and then look at some trade ideas on the second half of this video. So kicking off with the S&P 500, if we look at the weekly chart here, you can see we are down now 1.52%. It's Wednesday, so there's still a couple of days left of trading before this weekly candle finishes out. But what we can see is that we are starting to break below the 2,800, sort of that key psychological level that we danced around so much earlier this year and towards the end of last year as well. It's been an important area in the market, and it does coincide with the last 2 weeks lows that we've found some support at. So currently, this pullback is continuing underway, now going closer into the 6% territory. And when we looked at, or when we think back to sort of the market recap video we've done over the past week or two, we really looked at this as a good spot for the bulls to hold on to. Otherwise, we sort of really have this gap in here, this air pocket, if you will, of potential potential fast movement. If the market continues to break down here, it has the potential to sort of accelerate down, in my eyes at least, certainly not in a straight line, not saying that this is a prediction or anything like that, but it certainly has room down to certainly 2,700 and 2,600, all the way back down to the sort of bottom end of this chop here, back from the fourth quarter of 2018. So we do want to be careful here. We have another sort of reference point that comes in right above this 2,700 area. So there's not a whole lot if we start closing below here for a couple of consecutive days or even weekly close for this market to hang its hat on. So we want to be careful here. It's a slippery slope. Right now, we're still kind of within the realm of noise here around this 2,800 level, and the weekly close this week, I think, is going to be pretty important. If we go down to that daily chart here and just take a look at what's going on, you basically have, again, 2,800 held as support for all of March, held as resistance through February. It held as initial support on this first test of May 13th. Then we kind of came back down, and now we're starting to break below it. MACD making new lows here on the daily chart. So certainly caution is advised. It's been sort of advised in this choppy area here, but now we're starting to get a resolve of support to the downside. So we want to be extra cautious there on the long side. If we can quickly reclaim, if we just have some quick head fake down here where we trade below 2,800 for a day or two, and then we violently sort of squeeze back up over 2,800, that could be an interesting long setup or a false breakdown in the short term. Again, we need to see how it actually plays out, but keep an open mind down here. We could be on the final stretch of some type of stop run and kind of, sucking in the aggressive shorts, only to sort of squeeze us higher if we can start to move back over 2,800. So keep that in mind as well. A lot less to say about the other two, or if we look at the IWM, for instance, the comments really on the S&P 500 are going to hold pretty true here. The IWM is back at the lower end of the March range. So you can see, again, threatening a breakdown. We get a nice tail going today, but we have a MACD that's still moving into new lows on the daily. And then we have, this 148 area, which is going to be important to hang on to. So once again, sort of within the realm of noise here, it kind of tripped, had a push down intraday. It's starting to recover. So let's pay attention to those weekly closes and see how action holds up there. And very similar is the Qs, also at that important area, 178. That was approximately the March lows. That's where we tried to hold recently. You can see we are now kind of moving below that right now and starting to break down and kind of accelerate further. So much like the S&P and IWM, let's see how it closes out. Let's pay attention to this, really this 177.50 to 178 area, and pay attention to that weekly close. So with that said, with that as the backdrop, let's take a look at some ideas. Remember, we look at long ideas here. That's what we do. We short ETFs, and we look at individual long stocks. So that's where our sort of research and analysis comes from. So the ideas we're going to look at are still on the long side, even though they may not be ready just yet. I'm certainly not aggressively buying long ideas right now, but I want to keep a watch list of things that are holding up well and showing some good relative strength. So we got a few names we're going to look at there. For the short side of the market, I tend to believe that ship has sailed. I don't feel like there is an aggressive sort of entry here on this new breakdown of 288, but that's a bit too aggressive for me to want to short here, to initiate new shorts here. But if you're aggressive, if you really think that this market's in store for the sell-off, then again, that 280 level or SPY or S&P 500 2800 is something you can shoot against. If you really do need to, if you're looking for that short exposure. So first names, we're going to look at 3 names from IBD's list, and then just 1 idea from our watch list. So first up here is HXL. HXL here, again, comes from IBD's list, and what we can see here is that we really have a different story being told. We have, the pullback, the volatility, the breaking to new, 1 month, 2 month lows in some of the major indices. Whereas here, we have a much more quiet sideways consolidation, and it's trying to resolve in the opposite direction. It's trying to resolve higher. So if we look here at just this range, this $72, $73 area where it topped out in February, it's been trading underneath that, kind of bumping up against it. It broke out last week. We're retesting it right now, but all in all, this is a strong sort of breath of fresh air for longs here in this sort of sea of uncertainty that is the market right now. And I think if we can continue to hold up above this $73 area, if we can successfully retest here and kind of push higher, this is one that is likely to emerge here as a nice leadership stock if the market can start to catch its breath. Now, of course, if the market continues to sell off and if it aggressively starts selling off even further here, then this is going to be in trouble. This will certainly or likely be dragged down. But for now, this is a name. These are the types of names that I'd want to be paying attention to and looking at during this time. So HXL, that's the first one. RGEN. I posted this one yesterday on social, and we can see here that it's just very clearly painting a different picture here as well. It's trading just under its all-time highs. If you were to look at this stock in a vacuum, you would probably assume that we're in a nice, healthy bull market that's also making new highs. This is, again, a biotech. This is on the smaller side of companies, small to medium cap is probably how it would be classified. So it's generally, looked at as to be a risky stock, but you can see this is holding up very well. It looks quite pent up. In fact, it looks ready to sort of explode here to the upside. It really is seeming like it needs the pressure of the market to sort of get off of its back where it can start to break out here over this $71 high. So RGEN is one that, again, is ignoring recent weakness and very much looking to be in a strong position. Last but not least, just kind of a fun one here from IBD's list on their IPO list is SONM. I'm not familiar with this company at all. It's brand new issue, just of several weeks worth of trading, but we're off to a good start. It's heading in the right direction. It's making some good gains. Again, if this is your type of style or strategy, if you like the IPO or newer issues for those explosive moves, maybe you wait for some type of setup to develop here, some sideways, maybe 3-4 days sideways, a little flag, a little pennant here, and then a continuation pattern breakout. That's certainly the ideal, setup in my mind looking at this, but something I would just want to put on your radar as a new issue, working in the right direction. You may have some interest there in that. Very much a small cap, micro cap stock. Now, one name or just one idea that I want to just continue on from our watch list is biotech. XBI here specifically, so the smaller cap tilt to biotech. I mean, you could look at IBB as well, but this theme here is interesting to me because what we're seeing in XBI right now is we're actually not getting the new lows like we're seeing in the market right now. It is trying to hold sideways. It's been trying to hold sideways since the 13th of the month. And you can also notice that if we look here at the top end of the chart, the momentum oscillator, the MACD, is actually kind of is moving sideways here, and a little bit of bullish divergence when you think about the initial price move down here back on mid-April. You can see price continued to sort of make new lows, but you can see the MACD is trying to actually smooth out, go sideways, and kind of tilt higher here. So the tricky thing is that, if the market is going to continue this pullback, if we are going to see continued volatility to the downside here, and this is going to get nastier before it ends, then I don't imagine that XBI is going to be immune to that selling. This is a higher beta part of the market, and if the market continues to aggressively sell off, then I've got to imagine that this is eventually going to get pulled down with it. However, given where we stand right now, this is showing relative strength. It's not making new lows. In fact, it's nearly positive today. And you can see, again, it didn't even make new intraday lows today. So I'm paying attention to this sector. I'm not aggressively jumping in yet, just given the state of the market. But this is where I want to be building a watch list. For instance, we do have some long exposure in the space already, something like an FATE. This is a name that we do own. This is biotech, and this is trading at all-time highs, totally ignoring what's going on there in the broad market. We do have a piece of it. I don't think it's necessarily a good entry or a low-risk entry right here, but it's something that we've owned. And just like our first setup there in RGEN, this is a biotech as well, and look at the formation here holding up quite well. So I would pay attention to this space right now, just broadly speaking, and if we can start to move above $84 in the XBI and reclaim this old range, then I think you're going to have a lot of good movement there in some of those underlying stocks. So that's what I'm paying attention to. Again, not getting aggressive just given where the market environment is, but certainly watching it. So that's it. Hopefully you enjoyed this little hybrid version, trade ideas, a little market recap there. Stay safe and continue to look for those relative strength candidates. You can subscribe on our YouTube channel if you like these videos and want to stay up to date with all the future ones, or follow us on the Trade Risk blog. Have a great rest of your day, and we'll see you in the next video update.